Hello and welcome to Policy Watch, your weekly date with everything that's making headlines in the world of business and economics. I'm Surabhi Upadhyay. Election mania, continued buying in the stock markets, but worries on the weather front. These have been some of the highlights of the week gone by. We discuss all of this and more with Subhomoy Bhattacharjee, Deputy Editor at the Indian Express. Subhomoy, great to have you in the studios. Thanks for taking out the time. We start this week's show with the red flag visible over the country's economic horizon, the possibility of below normal rainfall. In its first forecast of the season, the Indian Meteorological Department has said that monsoon rainfall is likely to be below average this year at 95% of the long-term average. Now, the Met considers it to be a normal monsoon when rainfall exceeds 96% of its long-period average. The Weather Office says that there is a 35% possibility of normal rain in the June to September monsoon season, but it cautions that the chances of below normal precipitation are as high as 33% this year. The chances of deficient rainfall are 23%. Now, the IMD's prediction is quite in line with the forecast of the World Meteorological Organization, which also predicts below average rain for most of South Asia. The IMD has predicted a 60% chance of El Nino, which is the weather phenomena believed to disrupt rainfall patterns in many parts of Asia, including India. Patchy rain could hit planting of crops such as soybean, rice, corn, and cotton. This is already stoking fears of an inflation spiral. In 2013, India saw monsoon rains of 106% of the long-term average, resulting in record grain harvest at 262 million tons for the 2013-14 crop years. Okay, now this is the forecast. These are numbers. Subhomoy, it's obviously looking a little bleak, and I've been going through some reports. Most of the brokerages, international brokerages, are already painting red flags. I'll give you some statistics. Bank of America, Merrill Lynch, they're saying 50 to 75 basis points shaved off GDP growth this year. Then there is HSBC saying don't expect any swift rate cut action from RBI. Deutsche Bank seems to be right now kind of not, waving the red flag so much. They think that maybe it won't impact so much. But the point is that people are worried.
Well, yes, considering that the rainfall, there's two parts to it. One is that, of course, what the rain does to the crop year cycle. The other is, of course, what it does psychologically, that bad rains. So, does it mean terrible impact and all those things? Now, let's look at it segment wise. First of all, a bad rainfall this year may not necessarily be bad news for the crop, for the simple reason that we have over excessive amount of grain stocked in our buffers. So, for the food corporation, that actually means a bit of a comfort zone. Their excessive stock, they can start pulling it down. Now, this is despite all the things about Food Security Act and all that. The fact is, Food Corporation of India frankly doesn't have place to stock, and it needs it needs to push it out. So, that will be good. If it is not hamstrung by the rush to buy up from the Kharif crop, that will be good for the Food Corporation. It also, so therefore, that's not the, so in terms of the immediate availability, there is no immediate scare.
But this we are only talking about largely about grain, because that's what the FCI stores, and sure enough, it can push that into the system. That still leaves the inflation spiral when it comes to fruits, vegetables, and that's where the numbers have been really alarmingly high, haven't they?
Yeah, that's right. Now, what happens is, as far as vegetables are concerned, vegetables are short-term crops. And most of vegetables that are grown in India are not rain fed. They are irrigation areas, so essentially they will not be affected unless it is a huge drought in the areas where the vegetables are produced, like eastern UP, western Maharashtra, where places where there is catchment area, where the places where, very short term, very short distance to the cities, massive agriculture, vegetable crop production, though if those areas get hurt, chances of that is very minimal, because as I say, they are not essentially rain fed. So, I don't see that happening. So, essentially inflation spiral because of monsoon being deficient shouldn't be a direct correlation.
Okay.
The correlation still for inflation to spiral remains the supply side bottlenecks, that what is being produced doesn't get transferred to the dining table, and that is a problem that is more structural.
Sure.
So, essentially inflation spiral doesn't necessarily lead on from rainfall. What it does do, of course, is that for the next year or for the Rabi crop, If this trend continues, then the alarm bells should start coming up.
Sure.
If we look at it in terms of the psychological effect, then what it does for rural income, well, first of all, the reason why we had this MGNREGA was basically to take care of this sort of a situation. Now, since the money is there, we may like it or may not like it, but that money is going through. That money essentially does provide a sort of a basket for rural income, a sort of a safety net. So, essentially that also is not predominantly a sort of a distress case in the rural areas.
So, are you saying that perhaps this might be a case where, if unless it's a very severe drought, we might not see too much of damage as far as rural consumption, rural prosperity goes, that most of it will remain intact?
That's right. I mean, what the threat to rural prosperity or to smaller towns which are essentially agriculture driven, there the problems are more in terms of the fact that the supply chain isn't operating. That is where the problems remain, rather than the presence or absence of rain as a destabilizing factor. If a government is smart, and a new government, whichever formation comes in, should have the smarts in the first year, should not be particularly hassled by the fact that the rainfall is somewhat lower. Essentially what the IMD is saying is that the rainfall this year will be quite low. A 30%, 35% possibility of good rainfall means a 65% possibility will not work. So, essentially it does mean a fairly bad year for rains. Fair enough.
And just to give the numbers here, in 2009, which was our last brush with the drought-like situation, rain was about 23% below normal. So, right now the forecast itself seems to be a little more severe than what we saw in 2009. Very quick point there, and some of the factors that you've raised are interesting, and I was, they seem to be tying in with a certain section of economists, particularly those with Deutsche Bank, as I was quoting earlier. They seem to be saying the same thing, that if government action is decisive and quick, we might not see so much of an impact. And they also go on to argue that now both the crops, Kharif and Rabi, almost have an equal participation throughout the year. There's not over-reliance on only one crop in the year. So, is this becoming a situation where markets particularly tend to create a bogey, and lack of adequate trade might be one of them, whereas actual statistical impact is not that severe?
Yeah, that's right. I mean, if you look at it, for instance, as we talked about already, the supply chain doesn't particularly get disrupted. What gets disrupted is the chances, if you look at in the markets, that companies which are depending on offtake, a good rainfall for their products to take off. Now, fertilizer companies might find their profitability coming down, because there would be less demand for those. Similarly, companies which are selling tractors and other agricultural implements,
FMCG.
Exactly. So, there would be a certain amount of weakness, but at the same time we should also remember that this is the first year of a new government. So, there will be a huge amount of capital expenditure which the government will be pumping in, whichever government, as we say, and that would be a major counterbalancing factor. So, the growth pressures on India still remain more or less the same as they were earlier on. They don't get particularly exacerbated because of the fact that the rains may not be particularly kind.
Well, those who are looking at the Prime Minister's chair with eagerness would surely be taking, heaving a sigh of relief listening to your arguments. We'll take a very quick break. On the other side, the rise in the stock market continues. We get you the numbers and the analysis. Welcome back to Policy Watch. Now, despite monsoon worries, markets continued a steady run for the week. However, profit booking did set in by Friday, capping the overall weekly gain to just 0.25%, a quarter of a percent. The week saw only 4 days of trading, with markets remaining shut on Thursday as Mumbai went to polls. Corporate earnings have been a mixed bag, with big names like Maruti Suzuki and ICICI Bank missing estimates, while most of the technology majors have been on the mark. But Dalal Street's immediate fixation continues to be the outcome of the general elections, with traders holding their breath for the big day. That's the 16th of May. Okay, now Subhomoy, as we were just saying, I mean, if one starts looking at the glass as as you're looking at it in terms of this latest monsoon fear, then this rally could really perhaps continue higher, you think?
Yeah, but there's a limitation to it. The limitation is that first of all, it started with the FII money coming in. Now, the global signals which were actually driving the FII money are sort of tapering off. The Chinese numbers, the PMIs has been consistently been weak. Of course, the fourth number that came out was still better, but still basically showing weaknesses, and there are too many upsides coming from the international market, and the QE is withdrawal from the QE is happening in the US. So, essentially the space would get narrowed a bit. I mean, this is a time now when the domestic institutions and basically what we call the elusive retail investors, if they move in, then the market would move on.
Domestic institutions have been actually selling. Foreign investors continue to buy even in the month of April. But domestic mutual funds seem to be really wary.
Yeah,
because is that telling us something?
Essentially what they are doing is they usually work on sort of a counter-cyclical. I mean, when the FIs move in, the domestic ones sell, and vice versa. So that's fair enough. But for a long-term trend to emerge, obviously, as you pointed out, I mean, it has to be what a new government looks like. So, people would be holding their buying, or rather even if they are buying in basically have already over, and they would now be looking on to see whether they want to do any further investments in the market. So, I would not expect too many interesting rush up unless it is just one or two major companies suddenly coming in and brokerages coming in and buying, but overall if you look at even in terms of the futures and options, the markets aren't, I mean, they already look they are not looking oversold, but they are looking at that the rally is more or less now sort of waiting, going on to the place where they are saying let's watch.
Right, and everybody is looking at 272 and whether how much plus or minus above and below that.
Sort of.
But just a quick word on corporate earnings as well, and we're still going through most of the numbers, but there have been a couple of red marks there in red ink, whether one looks at, I mean, companies which are supposedly barometers for the economy. So you look at a Maruti Suzuki and one is wondering if car sales will pick up again or not, or you even look at some of the banks that have reported this whole issue of NPAs and what happens if there is a drought in the country, then what happens to NPAs. Even ICICI Bank, which is a private sector bank, reported numbers, but analysts have been questioning whether this restructuring is increasing, whether bad loans will keep going up.
Yes, Surabhi, that's a good point. I mean, about the banking sector and NPA. Well, I wouldn't say the rains should particularly be a reason for NPAs to go up, because all the banks, if they've been speaking the truth, they've been saying that the agriculture sector is not really the reason why they have got NPAs on their books.
That's all the power and infrastructure.
It's a power and infrastructure, and those in any case woes should end with a new government sitting that look, we want to get on with these work. Sure. So that should essentially give a fillip to the banks.
So you don't see a growing NPA problem per se, which keeps coming out.
I wouldn't think so. It's already because those which are already there would in any case be acting as a block. Now, unless somebody has really been window dressing, that's a different thing altogether. But otherwise, the problem shouldn't get too much going ahead. The automobile companies are actually have a problem, and that problem is long term. I mean, they really have a huge inventory pile up. So, you wouldn't expect those companies to be able to really kickstart the market. So, in terms of the if one looks at the BSE Sensex, the 30 group, if you look at it, it's only basically the IT companies now which are the strong ones. The banks, we'll have to wait for the new companies to come, for the new government to come in, and the power sector companies would again be waiting to see what, I mean, power and capital goods companies will have to wait to see what the new government takes up in terms of starting investments into the economy.
So, if I were to sum this up, the market has had a dream run so far in 2014. What could be the factors which might pose serious speed bumps in this journey, if at all, if you see any major speed bumps ahead?
Other than political, I wouldn't see anything much unless any prolonged stress always plays something funny with one company or the other. Now, if some company decides, goes belly up, that obviously can be a huge jerk.
Well, it hardly happens in India because lenders are all there in the so-called CDR, corporate debt restructuring.
Yeah, but whatever happens, when the company shows bad lines, so when people start moving out, and then that definitely would be a severe problem. So, as I said, that phenomenon always remains. In India, unfortunately, a downturn is always accompanied by one or two major cases of some accounting fudge somewhere. It has happened in most of our cases where a dream run has been broken up or a bad run has got exacerbated. Right. So, those are some things to be worried about. But if those aren't happening, then it's a time when companies could start moving up. The question is, whether does it mean that the retail investors, whether they should come into the market? I would think that it's time. I mean, if they haven't already come into the market, then this is probably not the greatest of time to come in. Because whoever had to make the profits have already booked.
Yeah.
So essentially now it would become a mug's game, coming in and losing your money, of waiting for a chance for making a quick buck, and that's dangerous. It's better to wait out and see what
happens on the 16th of May.
Yeah, sort of. I mean, and also going ahead, what are the sectors that start looking interesting?
Well, this week we got a positive signal on at least one big part of the economy. We're talking about mining, particularly mining of iron ore. The Supreme Court has lifted its ban in Goa. We discuss this after the break. Welcome back to Policy Watch. Now, this is a big relief for Goa's mining barons, but it comes with riders. Having stopped iron ore mining in the state following allegations of corruption and environmental damage, the Supreme Court this week finally lifted its ban on mining in Goa, but put a cap of 20 million tons on excavation. Mining of ore had been banned in the state for over 1.5 years, and the court acknowledged that a continued clampdown would seriously affect the livelihood of the 1.5 lakh people employed by this industry in the state. But as it allowed partial mining to resume, the bench also ordered monitoring of mining activity to assess the impact on ecology and environment for future appraisal. The court has also ruled that mine lessees must contribute 10% of their sale proceeds to the Goa Iron Ore Permanent Fund for Sustainable Mining. The bench has asked the state government to frame a comprehensive scheme in consultation with the Central Empowered Committee and submit a report within the next 6 months. Now, after Karnataka, Goa sees a bit of an opening up. The reason why we're discussing this, Subhomoy, also is, I mean, the kind of contribution this industry was making, not just to mining or the metal sector, but to the forex kitty of the country. Huge exports of iron ore, particularly all of Goa's iron ore, I believe, was being exported. Is it time to rejoice, or how should one view this partial opening up?
Yeah, Subhi, I mean, this is one thing that it really hit us bad. Till FY11, India was exporting 115 million tons to 120 million tons, and that went down to 5 or 10 million tons.
Because there was Karnataka ban complete.
Karnataka
and
ban, Goa ban. So that really hit us, and then of course the Orissa ban also affected us in terms of the domestic thing. So we really were hit badly. So yes, everything that was happening good on the iron ore mining and in terms of its effect on current account deficit, everything was really a bad show. Now we are, the Supreme Court says you can mine up to 20 million tons. Goa at its peak was producing about 45 million tons.
Right.
So we are still less than halfway there. So the point is, first of all, yes, for the miners, it's good news. They can start mining. And in any case,
but is it good news? There's also some complexity around the lease per se, because it seems many of the leases had actually expired in 2007. So will all these companies have to apply for a fresh lease now? What happens? There's this 20-year period, some controversy.
Yeah, but that's something, Surabhi, that people should be able to work out. I mean, because the state chief minister is pretty supportive of the mining, of the miners. So I don't think that will be a problem there. And so those things should be able to be worked out, as long as they are not opening up fresh areas for mining, because then the issue comes in whether you are giving the mines again on apportionment or whether you are doing an auction, which should be the right way to go about giving fresh mines. But as long as it's the existing mines which are being mined, that's fair enough. The point is that then none of these mines will be able to start extracting the iron ore to even 20 million tons within 3 months. It will take about 6 months to 9 months for them to come anywhere near their reasonably decent capacity. So that is one period which I mean, the time lag that's going to happen. After having done that, the point is that this mining ore business, Goa's mines were producing iron ore which wasn't considered very good quality for the Indian steel industry.
Correct.
So the point is, do we now decide how to go about it? Do we try to create facilities, specialties, something which can use this ore, or do we say that fine, I mean, we really don't have the ability and we export it? And also the environmental issues, which is definitely going to kick up again, because whether the right lessons have been learned. So that blowback could come. So those are some of the issues that would need to be sorted out.
Sure.
One as yet will have to see, because as of now there is no particular evidence that either within Goa the developments, the mining sectors has been or has got round to clearing up some of its bad practices, you know, the bleaching of the rivers, the pollution of the fields and others. Those things need to be sorted out.
You know, this has been an ugly topic for several years now in the country, whether it's Nyamagiri in, and of course that was aluminum and bauxite in Orissa, or whether Karnataka and the whole Bellary episode, and then of course subsequently Goa as well. Whichever new government comes into power, and particularly if it is an NDA government, because they claim to be very pro-industry, what does the new government have to keep in mind to ensure something which is sustainable and of course industry friendly?
See, mining per se would pollute, and there is no doubt about it. It's to say that mining would go on and yet there would be no pollution is oxymoron. So that is an environmental cost that has to be acceptable. Now, point is to what extent and where and how does it work on. It's all the best solution to this is to bring in capital. It is actually India's fixation with the small and medium enterprises in the wrong places which has created the problem. We have given out leases to mines which did not have the ability to do any major large scale capital investment. For instance, we did not allow commercial mines, large companies from abroad, the bigger companies which can bring in state of the art things, they know how to preserve the environment and yet mine. We do not allow those, and we allow small midnight fly by night operators to come in and mine, and then we run around saying that, look, holy Jesus, what has happened to us. So, essentially those things need to be sorted out. So, any government which comes in has to say that we have to open up foreign investment in mining, allow commercial mining, captive mining. A company which produces steel isn't necessarily the best miner. You know, these are the questions that need to be sorted out. If those are sorted out, if more technology, if more capital is allowed to come into mining, mining cannot be labor intensive, because if it is done in the picks and shovel way, then it's going to be polluting, and it will be, and the entire world has shifted out from there. You want to produce jobs, produce jobs elsewhere, but not in there. Otherwise, the environmental cost will have to be borne.
Of course, if they can do it in a transparent manner, then hopefully it will.
And this is the way to do it transparently, because if you bring in capital, if you bring in the new guys, the guy who have the technology and will be large scale, they have a reputational risk. You will be able to monitor them better because there will be fewer of them. It will definitely work far better than trying to do it the way it has been done so far.
Well, let's see, lots of challenges. This is just one of them for the new government which comes in. Thanks, Subhomoy. Great to have you in the studios today. Well, that's it on this week's edition of Policy Watch. Thank you for being with us.